Good evening, everybody, and welcome to another edition of Live Market Analysis coming to you on a Wednesday. A little bit of a difference, and that's because if you're watching the recording, you might not have known because you don't catch the live ones, but obviously Monday we didn't have a session. I did have a family commitment, unfortunately. My wife's uncle passed away last week, so we had a rosary service on Monday night. But it was very important to me that we do a session this week because next week I'm out of here. I'm heading over to Europe for 4 weeks. So make a note that our next live market analysis session will be on Monday night, the 28th of July at the usual time. Let us do the disclaimer. And before we get started, of course, which says that everything we're going to discuss tonight is general in nature. It has not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of this general advice, you should consider all of that very carefully or seek the help of a financial professional to determine its appropriateness to you. That's the official stuff. That's the stuff that ASIC wants to hear because they're cracking down on finfluencers. Would you call me a finfluencer? I don't think so. But the bit that I have that put in there that's not part of the financial services regime is this. Trading is risky. You will endure losses 100%. You're going to lose money at some stage. Ultimately, it's you and not I who's responsible for everything you choose to do. But we relish that opportunity to take control of our investing, to take it out of the hands of the so-called experts and put it back where it belongs in our control. But that can only really work if we know what the hell it is we're doing. And that's the goal of tonight's presentation, isn't it? To help you with the what the hell am I doing aspect. Ask me questions about trading. It could be about the methodology, how you get in or out of the market. It could be about money management, how much you put in, how much you take out. It could be about mindset. How do we keep our minds strong and consistent and maintain our discipline? Any stock, index, commodity, crypto, you name it. If I can get a chart of it, I'll do some analysis for you. Let's head over to not there. That was for the people that didn't catch the pre-webinar chat that I had. I was telling everybody what the weather in Rome is going to be over the weekend when I'm going to be there. No, we are heading to Amy Broker and checking the weather of a different kind. The weather on the Nasdaq composite. Fair weather at the moment, isn't it? And as sailors, we're fair weather sailors. We love fair weather. We embrace it. And whilst that trend is trending as strongly as it is with short and long-term uptrends, we can see that very quickly looking at those green ribbons. The fact they're green tells us that we're in uptrends. They're rising. They're still expanding. They're steepening. These are all good things. The price action, that's the relationship of peaks and troughs. We want to see rising peaks and rising troughs. Rising peaks, the only way you can get one peak taking out another peak. Don't forget, each peak, we should even call them peaks and troughs. That's for, the noobs that don't do these sessions with us every Monday. We call them points of supply and points of demand. How about we commit from today, and when I get back on the 28th of July, that we stop calling them peaks and troughs. We only call them points of demand and points of supply. And we say we want to see rising points of supply and rising points of demand, because the only way you can take out an old point of supply, which is a peak, is to have more demand than there was last time and or less supply. So we're removing supply from the system. And when we come back, we make a higher point of demand. Clearly, there's more demand in the system. There's also less supply, but we're saying we've got that demand reinforcement, and we can generally see that. I know for the sticklers out there, you'll tell me that trough there or that point of demand is lower than that one, and it is, but we didn't get a close beneath it. And I would say that more broadly, we are rising points of supply, points of demand. And then I do believe we have a predominance of demand side candles, and even after we've got a couple of little dodgy ones in here, I don't think that was ever really an issue. So we have accumulation, we have buy the dip, we have programmed buy orders that are pervasive in the market here on a supply side that either is unwilling to engage or unable to engage. The demand has locked up that supply. Either way, I think it's pretty good. And 2205, that's the big show, no doubt about it. I'm not saying we're going to breeze through there. I'd be very surprised if we breeze through there. I'd be less surprised if we put a few sort of nothing candles in around here. Not nothing is in bad, but nothing is in just hovering up and around here, just eating and ebbing away at the inevitable supply that's going to be there. Some people got in at the top last time. they're back to break even. Some of them are going to want to get out. We need to work through that supply. But we know if the demand is strong, and we can tell that it already is, we should get through it. All of that means that our risk rating here on the Nasdaq Composite for your US-based investments is FRP, full risk position. And what would change that? Black candles, lower peaks, closing beneath trend ribbons. But, I don't think we're going to see that in the next, well, you should say until we next catch up, but hey, you never know in a month's time. But I go away certain in the knowledge and calmed also, Zen-like, you could say, knowing that all of you out there know what you're looking for now. Okay, I'm confident that you can handle it. That you've got this while I'm gone. If I've done my job properly, then that should be the case. Let's head over to the ASX 200. That's a nothing candle, isn't it? That's the sort of candle I was intimating we might see on the Nasdaq. Just for a few, while we work through the supply, we got that today for us. A little bit disappointing, but it's hard to break away really when you're still fighting half the market, which is that there's your resources, bloody awful. And I know energy has bounced of late, but they were obviously down today with the oil price falling, modestly so, albeit, and gold as well, obviously struggling there. So, there's a bit of a decent whack of the market getting dragged down by that. So we shouldn't begrudge, I guess, the ASX 200. Not doing a whole lot today. FRP, I have nothing else to add there. I think you know the drill on that one. Let's do the whip around the grounds and see if there's anything to push us off this double FRP thesis. Are there any red flags? Russell 2000 looks okay. Nothing really sinister there at all. If anything, I want to say it's holding that long-term uptrend ribbon pretty well. That short-term uptrend ribbon is coming in now and acting as dynamic demand, almost like bloody clockwork, to be honest. I mean, look at that, and then look at that, and then look at that, and tell me, that doesn't work. And then, look how we held here, and then when we cracked, it really changed, didn't it? So, and then look at that. I mean, it's just amazing. So that's looking pretty good. I'm happy with that. And remember, that's the heart of corporate America there. Heading over to Europe. Oh, this is not as good. This is not as good because we're beneath the long-term trend ribbon. We're pushing back up to the long-term trend ribbon, and we're finding a bit of supply there at it. So that's not ideal there on the French market. And the DAX is fine, isn't it? The FTSE's fine, and the Spanish market is they're all still fine. So let's not let the French bring us down. Heading over to Asia now, and some very strong-looking charts. I think here. Let's go back to normal, give you a little bit more perspective. But the Hang Seng looks actually very, very strong. I want to check out the weekly chart here on the Hang Seng. If that was a turnaround setup, we'd be pretty confident on this one. So that's impressive. Let's stay with the weekly charts, if only for a second. The Nikkei looks fine. On the daily chart, it'll probably be a little bit more circumspect, but still, back above those trend ribbons, doing well. The Nifty 50 over there in India is fine as well, and we're getting some up movement now on the Shanghai Composite and on the A50 shares also starting to look good. They're closing in potentially in a candle or two on the highest levels they've been all year. So the opposite, I would suggest, of canaries in the mine shaft, and more really these factors are confirming our bullish stance on US and Aussie shares. Let us head over here just very quickly to the sectors, to the haves and the have-nots. It's just the way the Aussie market works. Half of it's not working most of the time. Discretionary, not terrible. We've looked at energy, financials, clearly hands down the best. Just makes me feel there's this warm, fuzzy feeling, as warm as this giant coat that I've got on can give me. When I think about those banking stocks and how they keep going up, and all of those fund manager tiers that keep falling as these white candles keep rolling up the screen. Gold, I think, has some problems. We talked about that last week. Healthcare just can't do it, but it's not terrible. Technology looks fine to me. Materials, we know, is terrible. Property still strong. Staples, neither here nor there, not looking great. Telecommunications, okay still, but a couple of interesting candles towards the end. Utilities not doing a whole lot, and really it's just the bloody banks, isn't it? How about that? We'd love some of those other sectors to join in. Looking at base metals, maybe this will explain why those resources are doing so poorly. No, it doesn't, because look, aluminium seems to be going up. Copper seems to be going up. We'll get an iron ore chart later. Nickel is going down, we know that, but we don't have many nickel miners left on the Aussie market. Lead is not great, but it's not terrible. It's up over the last few sessions. Tin's holding steady. And zinc, again, not great, not completely terrible. It's up over last week. So why are those resources companies so bad? We did get a little bit of a bounce in the lithium stocks. I know they're down today, but got a bounce yesterday, didn't we? On a bit of a pop there in the lithium chart. We do need to zoom in to have a look at it more closely. But this is the candle I'm talking about here. That's of interest, a decent demand side showing. That upward pointing shadow, not ideal, however, but it's the volume that I think speaks the loudest. So we've actually seen a substantial amount of demand come in, and it was met by a substantial amount of supply. But the good news is, I guess for lithium bulls, demand was more motivated than that supply. So lots of supply, lots of demand, but supply was sort of backing away until we got to the end of the candle, and the supply said, oh no, we've actually still got some more. And the demand side said, what? You've still got more? Bit of a nothing day today. Interesting. Volume, or big volume events like that, that's the second largest volume on record since this contract started trading back in July 2023. They can often happen around turning points, can't they? This one here was a turning point in the other direction, though. So I wonder. Look, we need more price action. Let us keep moving. It's important to do that because I want to get to your request today. We're going to head away from Rome weather over to the trading view screen and continue our whip around the grounds with silver. The most hyped trade probably of the year that still hasn't happened, and that's the way silver works. Silver bugs, or to the uninitiated silver bugs out there, silver really does things in its own time. I don't think that looks terrible, but it would want to get a wriggle on pretty quickly. And look, part of silver's problem is that gold's in more of an equilibrium phase now than that strong demand side phase, closing beneath the short-term trend ribbon there for the first time, I want to say, since May. Not ideal. Punctuated, I think, by this supply candle here, which matches that one, which comes in under that one. We've got three pretty decent supply side events here. Demand is still active, there's no doubt about it, but that demand is being met by supply, and that's why we're moving more into an equilibrium market, I believe. And if you're wondering why your Aussie gold stocks are getting belted, it's just the way it is. Gold doesn't have to go down for Aussie gold stocks to get belted. It only needs to go sideways, and sometimes it can still go up, and Aussie gold stocks will still get belted. Heading over to high-grade copper, looks okay. We saw the London Metals Exchange variant doing pretty well, and I think that one looks okay also. Iron ore doesn't look okay. That's still very much short and long-term downtrends, and I don't think there's a lot of respite on the horizon for that one. Talking about respite on the horizon, uranium's starting to look quite good now. We've obviously been tracking this very closely since it changed the short-term downtrend here. I mentioned that in ChartWatch when it occurred. I also mentioned that to watch this area very carefully. I said if we're going to close above the long-term trend ribbon, that would be something interesting. If we set a trough above it, then that would create the new bull market, which I also called there, and it seems to be continuing on its journey. So that's good for uranium bulls. No reason not to be FRP here now, because it has officially turned around. Brent crude oil, obviously in the news of late. I wrote that up tonight, so I'll refer you to that analysis. But this is a species-ending event here. That one in combination. This is done. So whatever you think about what's going to happen in the Middle East next, the oil market's telling you that. Look, what sort of escalation is it going to take for this to break out through 80? It would have to be something catastrophic, and the market's just saying, look, we're not in that league anymore. Coal prices down on thermal and about flat on coking, but still not looking great. Let's finish off our Sojourn. It's all about Sojourns. This is the Sojourn edition of live market analysis with bonds, and not a lot to report here. We are seeing a little bit of buying of bonds. So when yields are going down, it means bonds are going up. And I have noticed, a dozen or more bond ETFs coming up on the ASX. I put a couple in tonight. If you're looking for bond exposure, I felt I can't ignore them any longer. So we are seeing money coming into bonds, and I think this is less about a flight to safety, because if the money didn't come in, we talked about this last week, the money didn't come in when there was a reason for it to come in, and that was missiles flying between Israel and another Middle East country. So just to say those words out loud, missiles flying between Israel and one of their neighbours is usually a pretty good reason to buy US 10s. And it didn't happen. But now we are seeing some response there, but I think this is less of a risk-off move and just more of a realisation that globally we're going to have lower interest rates for the next 9 months, I think, at least to the end of the year. So Fed cutting, and that's now a lock, Powell versus Trump aside, and with today's substantially better than expected CPI number, RBA also probably cutting 75 basis points. We could be very close to a 3 handle by the end of the year as a result. Just inflation is just not an issue anymore. Economies are below average trend growth rates, and therefore central banks now literally have green lights to just put their foot on the gas a little, or potentially take it off the brake a little, whichever one is more appropriate. Looking at some of, what should we look at? Aussie 10s. There you go. I mean, our yields are falling as well. It is, I think, to do with those falling interest rate expectations and off the ledge there on the 30. So this is all good. This is all stuff that supports stronger stock prices. Okay, nothing supports stronger stock prices more than a falling discount rate. That helps every stock, even the bad ones. So that is the whip around the grounds, ladies and gentlemen. Let's head over to Amy Broker and to your offline requests first. And I'm going to kick off with, actually, I'll just check you lot over here that are online, make sure there's no technical difficulties. Adonis has got some stocks there in the US. We'll do those at the end. Thank you, Adonis. A lot of people saying hello, a lot of people with questions, so no technicals. Let's head over to Mick. Mick's got OMA. Omega Oil and Gas, and I'll just go zoom normal here. I can see why you were interested in it a little while ago, Mick. So on this candle here, that's where you would be interested. It got itself back above the long-term trend ribbon. It sort of dinked at the ribbon. I wouldn't say it dinked above the ribbon, but dinked at the ribbon. Strong candle, strong volume as well. I don't think well, I guess if you had the on-stop order, you would have got in that day. If you're waiting till the end of the trading session, you 100% wouldn't have got in that day. You wouldn't have been allowed to. And then it hasn't really done anything else. If you're in it, I don't think you'd want to be full risk position, because we're looking at something that resembles this, okay? And those candles are pretty decisive. So not full FRP, at most 1/3 is my feeling. But yeah, it's not something I'd be wanting to have my money in at this point in time. If you're not in it, that sort of segues there. There's absolutely no reason to buy this. I can't find a reason. I'm not even sure why you put it on your list, to be honest. Let's go to what would have to happen for it to be. Well, you'd have to see something like this, and it would be some really, really solid candles in and around there at the very least. And I'd put to you we're a long way away from that. Going to keep moving then. Let's go not to that one, but to that one. This one I can see certainly why you would have been in it until not that long ago, or certainly full risk position until not that long ago. This one is a solid trend. It's been doing the work. But we are having problems now. It's part of that weakening gold complex, isn't it? Let us delete some of these just to make it easier to do the analysis I want to do here. And we're going to draw in our peaks and troughs. And, points of supply, aren't we? Points of demand, so let's label them. That's your point of supply. Let's go caps lock, point of supply, point of demand. And we don't know where the next point of demand is going to fall, okay? We won't know that until we get something that is showing a higher high and a higher low on the day. And that will form the point of demand. So it could form there, or it could form after several more down candles and then form down here. But the point is, wherever it does form, we know that it will be lower, right, than the last one. So my point is, you don't always have to see that next lower point of demand or that next higher point of supply in the uptrend to know it's going to be that way, to know that the price action has changed from demand side control to this is now supply side control, right? And that in itself, I think, prohibits us from running a full risk position. So this idea of FRP question mark, well, that is unequivocally for me going to be a no. It just can't be that way. And then it just comes down to, well, how much of a risk position? And many of you are probably shouting at your computer screens right now, Carl, none, zero. I'm done on this one. I'm moving on. There's so many other good things. That's what I've learned. If I've learned one thing from listening to you, suffering through your ramblings and rantings, both video and written over the last year or so, is that there's always another trade out there. You know, and that could be. I see there's dozens of fantastic trades. I've got some. I've missed many, but I know they're out there. And geez, if I keep my money just dwindling and dying in this thing, then that would be a great tragedy because it could do so much more. So many of you would say ZRP. I think I'm there as well. The candles don't really suggest to me we should give this any more of a chance, and we're also beneath the short-term trend ribbon. So can I just then make it official? This is my opinion. You can do whatever you want, but I think I'm ZRP on that one. Let's go HCL for our next one. Escaping won't cut it here, Carl. It's not trading view. We have to do it a different way. We have to go here. This one looks interesting. Let's go zoom normal. Definitely something going on here. It's one we've looked at in the past clearly because I've pointed out a major point of supply, and it looks like we're sort of vibrating, aren't we, between this trough, that peak, and I want to say a little bit that peak as well. And lo and behold, our little reversal came right in that area, like clockwork. It's not going to happen all the time. I think you'll agree it happens more often than not, though. And it's just a function of ex post regret of people doing stuff, buying in here because they thought it was cheap, and then realising down here it's not cheap, and wanting above anything else, not to make money anymore. Isn't that interesting how often we get into a stock with just these amazing ideas of how much we're going to prosper, but so very quickly we don't care about prospering, we just want our money back, isn't it? And that's what these levels represent, the ability for so many investors who made mistakes to break even. But the great thing about these levels is that when you hit them, you take out a bunch of supply, so that when you hit them the next time, you've got to think there's less supply there, and it's more likely then that you can actually push through. So that's what we're seeing. I think this is a really solid test of that supply zone. Yes, supply manifested itself there, but also we're seeing some demand come back in, and it's doing it in places that we would expect it to. So we could see strong demand at the bottom of these two candles coming in and being reinforced here. This is important as well. Nice long lower shadow on that one. Decent close as well. I don't mind it. Mick's actually written here, take profit. I don't think you need to take profit just yet. I think if you were going to take profit, well, even that candle there, would you have taken profit on that candle with that long lower shadow? No. And I don't think you're doing it today. So for me, no. I think if I have this one, I could go FRP on this one. Would I add risk to it? That's probably the $1 million question. This was a decent pullback. I don't think I'm far away from it. Maybe just, look, I wouldn't mind if you said, Carl, I just, based on that candle today, just letting you know I added some risk. I say, okay, yeah, I can see why you're doing it. No problem at all. For me, maybe just one more little dink would do the job, because we can see there is some problems here. There's a pretty decent supply level. But I've answered your question, which is take profit question mark. And for me, no, FRP is the way I would go. Thanks, Mick. Liana, first time I've ever seen something from Liana, and welcome, Liana, to asking questions. LKY, what are we here? The question is, are we FRP? Are we 2/3, 1/3 ZRP? I think, well, look, I won't, maintain the suspense any longer, but I think we all agree with ZRP, right? The question is where or how we got there. Can I get a thumbs up? So when I'm gonna start with the cursor on this candle here, and I'm gonna wait about 30 seconds on the next candle, and I want to see the number of thumbs up of people that would have taken some risk off the table. Let's say a third. Okay, so on that candle there, obviously there's no thumbs. There should not be any thumbs because that is a strong demand side candle. Okay, I'm going to wait now. What about that candle there? Is that one where we're going to be taking risk off the table? And I'll wait a few seconds to see if there's any responses. Perry's taken some risk off the table. I know we can see what's going to happen. I know everybody should be putting up their thumbs because, of course, Carl, that's where we should have taken risk because the price tanked. But we didn't know that was going to happen. Oh, we didn't know that was going to happen. So what we really should be doing is looking at this. And for me, no, I don't think so. It's not a round number. Let's go back. Let's actually go back. Let's go back. I can't go back that way and not show. But I want to see if there are any major points of down and points of supply. It's so sketchy there. It's hard to even say that these will behave as such. But we could do that. So let's take that and let's go. But you can see, this is Sketchorama. Let's extend that there. Let's make it red. So look, does that change? Does that change your opinion, knowing that, well, it is a bit of a point of supply? It's such a sketchy zone from the past, though. Look, for me, no, I don't think so. I'm not the one that's going to lock anything in on that day. I think it's just too early. It's too jittery. Everything else is very, very solid. Okay, knowing now that we don't know. Okay, let's go to this candle now. I want to get your opinion now. And I'm expecting Roscoe's gone thumbs up. There's a few. Okay, so this is the day that some people are going, okay, look, one candle I can permit, but another candle that's actually quite a supply side candle reinforcing the other one in a zone of supply is probably enough to tip me out. I'm going to come in at 10 to 4, 350. I'm going to see that. I'm going to go, and if I got in down here or whatever, and that candle there or that candle there, no, look, I'm going to knock a third and say la vie, right? Happy days, see what happens. I've still got 2/3. So if we all agree, let's go minus 1/3 on that day, and that's all we're talking about. We've still got 2/3 of our risk exposure. All right, let's go. Okay, what about now? Okay, got another thumbs up from Jackie, thumbs up from John, and I think we're going to go copy and paste, aren't we? Okay, and can you do 2 thumbs up? I wonder, are you able to do 2 thumbs up? Or can you do those exploding thumbs? I think, would you do more than a third? Exploding thumbs for more than a third. I've seen them. I don't know how to do them, but I've seen them in these sessions. No exploding thumbs. People, I think, happy with another third. So we're down to a third risk exposure. Some people might look at that and go, you know what, stuff that, I'm out. Let's keep going. I know there's a lower shadow, but okay. Yeah, they're getting thumbs ups there. I mean, that for me, that's the last one. If I had a third because I liked the story or whatever it was, my best friend knows the managing, he's going out with the managing director's daughter and or something like that, or he knows the guy in the drilling rig, and I wanted to keep some. That is absolutely the last chance saloon. There's no possible way after that candle I can have any risk on this trade. So that is ZRP. Okay. And I don't care where it goes next. It's completely irrelevant. None of these candles matter now. And that's where we are. So that's the ZRP. But that's how we got there. And I like to do these case studies, and I like to see you all agreeing, because if you all agree, then that's it. If I'm not here, you're all fine. You don't need me for these webinars anymore. Let's go to Liana's next one, which is DTR, which I won't do the same. I'll just tell you how I feel about it, but I reckon, I know you're all shouting at your screen, that one there, like you can't possibly be full risk position after that one. I reckon, if anything, don't forget, now it can't be the first time we've got to 10 cents on this one, but it's not far off it. But I would say even at 10 cents, you're probably going to do it just a little bit on the way up. What about this candle here? How do we feel about this candle here? That one there. I don't think that's a reason to get out. It's not an ideal candle, but I don't think it's a reason to get out. And that's strong, and that's coming back. I mean, that's fine. That's still okay. That's still okay. This, I think, changes it for me. There was plenty of demand at the bottom of this candle. Where did it go? There was plenty of demand here as well, and we've taken most of it out, and then certainly that day. So if I'm minus a third here, maybe a little bit more. Certainly here, it's going to be very hard now because we have moved into our lower peaks and lower troughs by that candle. So really, I think I'm minus 2/3 here, and you might say, oh well, that was right before it bounced. You should have waited a couple of candles. Well, that's up to you. I don't care. But I think I'm moving on by then. None of these are buy signals for me because this is so severe. We're in a long-term we're in a downtrend now. Lower peaks, lower troughs. We should see a dink the other way first. And even if you didn't get out there, then really the absolute killer, the point of no return, is really, well, even that one you could say, but certainly that one, there's absolutely no way for me, if you're using my model, that you can have any risk on this trade at this point in time. I don't know what's going to happen next tomorrow. There is absolutely a possibility that we could see this candle tomorrow, and all the people who held on and ignored my methodology, they would be laughing their heads off, and everybody who paid attention to my methodology would be absolutely furious or not care. Hopefully it's the latter, because you made the right decision based upon the information that you had. Okay, they are the Aussie offline requests. Craig, I've still got yours coming up. You must remember to do Craig's US one. Let's head over to your online requests. Adonis is USA. Michael, can we look at TEA, which is a picture of demand side control? Let's go zoom normal. So you know I ran that as a feature chart, so highest conviction. I would have run it on that day. I would have run it on that day. I maybe ran it on that day, but it certainly would have made my list on that day. Maybe I ran it on that day as well. So I've definitely run it several times in the recent past. I think I put it back in the uptrend list on that day there as a start. So either way, 1, 2, 3, 4, 5 clear-cut add risk signals using my model on this one as one of those sort of hybrid turnaround continuations. What do we do today? I actually ran it today. I think it's just as much a feature chart, a feature trend today. I know it looks like there's a little bit of an upward shadow there, but you need to understand the context of that candle. That candle is really that big, and therefore that upward shadow is minuscule because that gap matters. And that's why we can see down here in my optimized true range why. Is it doing that? Can I draw that? No, it's throwing my arrows away. But this one here, optimized true range, you can see how big that is. So no, this is FRP for me. It's a picture of demand side control. Even that lower shadow today, it's awesome. So I personally, for me, I wouldn't want to sell a single share of these. What are the round numbers? Is $4 a round number? I don't think so. $5 is more important than 4. We've never been there because that's all the data there is. And when you've got these stocks that are relatively new, people's imaginations run wild. Have you heard of Tasmea? It's a $10 stock. Now I wouldn't have a clue what Tasmea does, of course, nor do I care. But it has, it didn't stop me from running it there, running it there, running it there, running it that day. Go check. I mean, I know you know as well. You know if I put an arrow to it, you know it was in the list because you know how my model works. But also running it on that day just before that tank. Probably running on that day as well. That's just the way the model works. But count out the number of arrows that turned out to, to see gains after them compared to the ones that didn't. And the goal is to be ahead after all those arrows. So hopefully that answers your question, Michael. FRP for me. Let's go to, and it's a great case study. Let's go to Roberts, who's got BXN. Now that is not one that is ringing any bells at all. BXN. Now the name does. I think this has gone in fairly recently, perhaps. Hasn't made a feature, so it's not ringing that much of a bell. Looks okay. Looks okay. And yes, solid okay. That's okay. That's okay. They're good. We do have, it's just the price action. The price action for me is the one that's keeping me back, and those quite decent supply side candles. So look at the price action there. We know that we prefer this price action. Both show rising points of demand, rising points of supply. Both show, building demand reinforcement, supply removal. But in terms of the market's confidence, in terms of those latent buy orders that are just lurking in the system trying to buy that dip, if we call them scenario A and scenario B, scenario A is so much better. And look, what if you've got a B, or if you're looking at a B, what it does is going to take points out of our score out of 10. So, if we're starting with a score out of 10, then what are we losing for having a price action of B? Is it minus 2 points? Minus 2 points. So is at best it could be an 8 out of 10. And then what are we taking off for these black candles? Okay, and would you say there's a predominance of white candles there? Or is it still predominance of black candles? I think it's still a predominance of black candles. I don't think the demand side is totally in control of this. I'd knock at least another 2, at least, because candles are so important for me, for candles. Still early in this sort of hybrid phase, it might lose 1 for that. So I think we're sort of a 5 out of 10 here, and I think that fairly sums that up, doesn't it? I think that fairly sums that up. I don't know what's going to happen next. This could be the best. This could be a 10 out of 10 tomorrow and next week. I could come back from a holiday and this could be the best one on the ASX since then. All I know is what I know now, and that's a 5 out of 10, and I don't want to trade 5 out of 10s. Let's go CCL. And looking pretty good. Looking interesting. Interesting that sometimes we draw these things in previous webinars, and we say, okay, there's a big point of supply there. And did it impede price action? It did. You've got this little dink here. So it acted as supply there, but it acted as demand there. It's just so good, isn't it? And now it's acting as demand again. So that's what we want. This definitely made the list today. It doesn't have ideal price action, so it didn't make feature. We are seeing some overlap there, obviously, between previous points of demand, previous troughs. But this is a very strong motive phase through here, and that's what definitely got in the list today. This is also very strong. We don't have a long-term trend yet. Okay, it hasn't been around long enough. Do we have a predominance of demand-side candles? Certainly there are some supply-side candles lurking around, but no, I think overall we can confidently say, particularly with this last run, that we do have a predominance of demand-side candles. But it does lose some points for price action, and maybe even just the fact it doesn't have a long-term trend. But look, I'm happy with this. I'd probably be more of a 7 out of 10 here. But certainly I think today's candle, and I think I even put it in yesterday, I think warrants risk. And certainly I'm an FRP, and in fact, I don't have any problems going plus 1/3, but it would have to be, what you feel is the best one you can find on the day. Let's go to XRF, and a bit more of a turnaround setup again here. I know it actually appears to have been moved into a long-term uptrend on that last candle there, but it's still more of a turnaround place, maybe edging on one of those hybrid setups. Look, decent price action right at the end there. So we can see we've got a point of demand there, point of supply, point of demand, and we don't know where that next point of supply is going to be. Here's the trough. I should have sort of drawn in that old trough. There's a trough there. So we can see, for the most part, that last trough is at or above. I'm happy with that because we've got downward pointing shadows here. We didn't come close to closing beneath this peak. The shadows are telling you that this old point of supply, like clockwork, and I'm not just making this stuff up, is acting as a point of demand. And look at these last two candles are actually very, very solid. So that one and that one. So I like the price action. I think the candles are pretty solid here. It's still very early in the trend, so it's quite speculative, a little bit more high risk. You might even say it's closer to more of an aggressive trade than even a turnaround setup. I don't mind it. I am looking at a lot of this other stuff historically here and thinking there's probably going to be a bit of supply here that we're going to have to deal with. So in terms of where that might be, there's a little bit here. We don't seem to be too fussed by that, do we? And to prove that, let me shoot that across, and you can see actually today's candle says that's not really an issue. Probably some in here. So what I'm trying to do here is say, well, how easy is this trade going to be? It might not be the easiest of trades. Where's that going to be? I don't know. Let's just put it in. Don't have to be too pedantic with these things. All right. So it's losing points for how hard this is going to be. It gets a lot of points here, but it loses points here. Look, I mean, I don't know. What do you reckon? I could definitely go solid 6 out of 10. If you had it, I've no objections actually. I mean, I'm an FRP here. If you're adding risk to this, actually, I don't mind either. And whether it's 1/3, or I would query whether it might even be less. It's just putting a toe in the water and just seeing how it goes a little bit. I don't mind. I don't mind either way actually. It's solid enough. Light green ribbon, dark green ribbon. I can't tell you it's not meeting the criteria. It is meeting the criteria, and therefore it's FRP, and therefore if you want it to add a third. But again, when we get to the end of our analysis, and you should be analysing more than just the ones we're talking about in this hour and a bit, is this going to be the best one we're going to find? Okay, but hey, you've asked the question. I want to answer that question. Okay, different Michael here. ASB minus a third. Very interesting. Oh, okay, good. I'm glad you brought this one up because all we've been doing in these sessions up to today, and minus a third for me, is adding risk to this trade over and over again. It's been so reliable. Yet I think we're actually more than a third here, Michael. What do you reckon, Michael? Just if you're FRP, well, just tell me. Just type it in, mate, down the bottom. Tell me what you are. Are you FRP? Are you plus 2/3? Are you plus a third? What have you got left on this? I want to know. I'm curious. Donis is giving me thumbs down. Michael, type it in. If you're still awake, that is. I know I tend to put Michael's still FRP. Okay, Michael, why are you FRP? Why? I don't think we should be FRP here. Now, look, this candle worries the pants off me, but is that enough in and of itself? And that's not a rhetorical question. I'm literally asking myself that question right now, and I'm going to answer it myself out loud. So let me just zoom in a little bit, and then I just want to see what it looks like. I should zoom in a bit more. So I want to see. So you have to look at these things without seeing the future, right? And I know we know it's going to happen, but that candle. I want to know how I feel about that candle. Because it's not a lower peak, is it? Because lower peaks are alarm bells for us. But it is a decent candle. And I know that. And we could say these things, like we could say, okay, well, subjectively speaking, isn't it? Subjective means, it's open to interpretation. Subjectively, that's a big candle. No, objectively, and that is with, far less discretion, objectively, we can measure it. No, it is a big candle. I can see it's an important candle. I don't know why. That is amazing. I don't know if you can see. You can see. I try and draw an arrow and then it disappears. But we're talking about this one here, right? So that is the biggest candle since this one. Okay, and I know that one didn't turn out to do a whole lot, but this is an important candle. So that's the first thing. The second thing is it's an important candle with an upward shadow, a low close, a black body. So we know there's supply in the system. We know it's an important candle, but we know it's an important supply side candle. That's the second thing. The third thing for me is that it is reinforcing a known point of supply. Okay, and it's a known point of supply because, I don't know if this is the trough here, but let me use it as a trough, and I'll explain why I don't. No, I've got one before that. Let me show you. So I just need to check. So that high there, 594. And I can't tell just by eye whether that is lower. No, it's the same, okay? So this won't be a trough because we need a lower high and a lower low. We've definitely got a lower low, but we have the same high. So that's not a trough, but there's a trough there, 100%. So if I want to draw peaks and troughs in, I'm going to start here, okay? Not there, I'm going to start here and go up to here, 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 and here, okay? And then potentially we're coming back up the other way. I won't draw it in. So we know that we've got this point of supply here, and to be fair, a far more innocuous point of supply, okay? Because objectively, none of these candles here were particularly special on our optimized true range, okay? And that's why I give you all my indicators, so you can do exactly my analysis objectively. So we've got this substantial candle. We've got this substantial supply side candle reinforcing a known point of supply. For me, that is starting to feel like a good reason to take some risk off the table. And we've always told you that this is not a black and white system. There is still some subjectivity here and some discretion. So some of you will feel, you convinced me, Carl, I'm out of there. And some of you say, no, look, this is a great trend. I could have got out a million times before and it would have been way too early. I'm going to give it another day. And that's all we're deciding. We're deciding minus a third or another day. Can you see how simple that decision should be? And if we were doing it the other way, like so many other investors do, where they say they have to be all out, that becomes a hard decision now. Like if I'm deciding to sell all my ASB shares that have done so well for me, that's a decision I'm really going to sweat over, and I might not make that decision. Yet if I'm deciding whether to sell a third of my shares on the basis of the evidence I have, that becomes a really easy decision to make. And I don't know if this is going to let me just do one candle. I hope it does. No, it bloody flips them all. Can we say that by that candle there, now that we've actually made another trough here. Look at this. Oh, sorry, we've taken out the trough, I should say. For me, do not pass go, do not collect 200. We must reduce risk there. It's not a question of if we're reducing risk. We must reduce risk. It's just a question of how much. If I was going to do a third for yesterday, like I was tossing up on a third or nothing, I'm doing a third, but I'm probably doing 2/3 today, right? And then we've got today's candle, which is making me feel like I don't want to have any risk. That's how I'm feeling. Now, some of you might think, oh, that's a bit premature. The trend's still good. It hasn't closed beneath the short-term uptrend ribbon. And I would be okay with that too. I'm just telling you how I feel. You're going to feel how you're going to feel. I'm going to tell you how I feel. I think probably, at best, this is more of a stagnation or an equilibrium phase now, isn't it? This one could go sideways for a week or 2 weeks or 3 weeks. It could collapse. We've seen that happen before. But the chances of it just throwing in huge white candles and going straight up, I think, is lower than those other two scenarios. And it has done in the past. But I don't think we've seen the same or a supply side attack to this degree before either. I'd argue that this is the biggest supply side attack we've seen. Are you a third left or are you ZRP? That's really the only question we have, isn't it? And that's where I want you to get with your reasoning, isn't it? It doesn't have to be. I have to be all in and all out, and that's the beauty of this model. Okay, hopefully that answers your question. Hopefully everybody. I don't want to bore people. That's not my goal. I know if you don't have ASB, and you might not be interested with it. I fear sometimes I go on too long. But if I am going on too long, then give me a thumbs down or something. But if it's okay and you're happy with this level of explanation, we've always got new people coming in as well, and I think they would really benefit also from some of these things that maybe you do know, and you're probably going, Carl, you've told me this a million times. But sometimes some of us like to hear things a million times. That helps us really sort of internalise it. I don't know. Let me know if it's good or bad. I think it's good. Francine says it's good. Jackie says it's good. Roscoe says it's good. Okay. I think that was Nicola behind there. Somebody found the exploding thumb emojis. Okay, we're all good. John's good. Let us go, because it does mean we go through the list quite slowly. Okay, got to pick up the pace then. Michael's got SLX as a turnaround. Yeah, it is looking more and more that way. Let us get rid of some of these. I like to start again sometimes. Look, it is. Look at this. So we've got certainly got that. We're attacking this. This is an aggressive one. Okay, it's because we don't yet have. You can see, yet we definitely don't have the orange. We talked about this in last week's session. If you don't remember it or you didn't see it, go and check last week's recording. And we said that if we are closing above the long-term trend ribbon and that long-term trend ribbon hasn't turned amber yet, then we can take the trade. It's just that it's an aggressive trade. We just understand that maybe we want to trade a little bit less. We also understand that it's riskier. Okay, and the reason for that is we were able to take aggressive setups, and I'm just using a generalization here, like that candle. Let's say we looked at that, we said, oh, that's an aggressive setup. Look, it's missing a few things for me, but let's say we use that. And we said, okay, we're allowed to take an aggressive setup here, knowing that, look, even if we use the candle low, and if we got we had to get 1-to-1. That's what I'm saying. We had to get 1-to-1, and then we could tick that as an aggressive setup, okay? But when we're closing above the ribbon, it doesn't matter whether the ribbon is amber or not yet. We're above the ribbon. So the ribbon is no longer acting as dynamic supply. It is it's been consumed. By definition, it's been consumed, so we've closed above it. So that frees up our reward to risk to start to look at other levels like previous points of demand or previous points of supply. So clearly we're going to make one-to-one here on this sort of basis. All right, no problems. So yes for me. This you can take. I didn't put it in the chart watch list because I don't do aggressive setups there. I only do turnarounds and continuations because the masses don't get this chat that we have on Monday nights. Okay, so I don't trust them with the aggressive setup. But this is an aggressive setup, no doubt about it. It's FRP if you happen to have it for whatever reason. You got in a day early, and yes, I can go plus a third. But in brackets, because it's aggressive, you may feel more comfortable with, say, a sixth or something or whatever, like a little bit less. All right, let's keep moving. EML for a continuation turnaround. I looked at this today. I thought about it. It didn't quite make the list, and the reason it was just that upper shadow I felt was just a little bit too long, just a little bit. So splitting hairs a little bit. And the other thing was I didn't like this drive. I felt this drive was too large, too serious, too much of a give back of this rally here. I really wanted to see it hold on to more of that. And of course, if we look at where the last peak is, the last peak's there. So that with this trough, really pushing well into that second from last peak, that is problematic for me. So it lost a few points on that. And then that upper shadow really did, unfortunately, force me to keep it out of tonight's list. But what I can say is everything else checks out. So we're probably going to go short-term uptrends on the next candle, assuming it's not a bearish one. We've got a long-term uptrend. It's fairly well established. The price action is rising peaks and rising troughs, but it's not great price action. If you wanted to, I don't think I'm here, given I've seen plenty of other really stronger ones than this. Certainly FRP, I've no objections. But I would say next demand side candle, then you could go plus 1/3. Okay, but demand side candle is a high close. That is a demand side candle, but it could be better. We want a strong demand side candle. Don't maybe put next strong demand side candle because it's enough of an acronym already. Okay, Adonis, it's seasonally a weak period for gold over June and July, so we'll see if the pullback is in line with that. I'm not aware of the seasonal trends in gold, but seasonal trends certainly are something I'd like to keep an eye on. I'd like to know roughly where they are. I still go on the chart, of course, but I am seeing more likely equilibrium than continued strong trend. BCI got on the list again today for you there, John. FRP, as it says last time, and plus 1/3. We've got a nice strong trend there. We do have actually strong price action, this last little trough at or above that second from last peak. I know it's sketchy, so for it to be showing that is impressive in itself. Let's just zoom out and see if there's anything really sinister going on there. And look, I don't think there is. We're through that level there, so that's the level now, and we are still miles away from that, so we don't have any problems there. And I would say predominance of demand side candles, granted, it's still a bit sketchy. So FRP, yes for me. Plus 1/3, yes for me, and it also did make the list tonight also. It wasn't a feature, but certainly made the broader list. I think it might have even featured yesterday. Nigel, hi Carl, your thoughts on BXN? Oh, I think we did that one, didn't we? BXN? Yes, that's good. I get a freebie on that one. We've done it for a high close. And XRF, thank you, Nigel, for asking questions that other people have already asked, because that does also save me XRF. It saves me lots of time. I will enjoy my holiday. Thanks, Nigel. Roscoe's got CGF, which still looks okay, isn't it? Clearly, Roscoe standing out like the proverbial you-know-whats. And there's two of them as well, by coincidence. Those two long upper shadows at $8. Clearly, there is a fund manager, or there are fund managers that are going, $8 is our number. Like, just sell what we got at $8. But the demand side continues to ebb away. Continues to chip away at them. And on the really strong days on the market, you might see a bit of a flourish here, but then, that supply comes in. So look, really until it deals with that supply, and once that's so long ago, I wouldn't even worry about it. We're fairly clean and clear here. So that's okay. Look, a happy holder, I think, still. So I go FRP. I'm definitely, those candles have definitely got my attention. I'm just going to get rid of those and then just go back to FRP here. But watching closely. I don't want to see it close beneath here. I think that's your deal breaker. Taking some risk off the table. Big black candles before then, obviously. Might get some risk off the table a little earlier. but FRP. What we really need is a close, and not just a high close, but something that's closing, I would say, at least near the top of that second candle there. Okay, and then that would be enough to tell me, look, we've dealt with that supply. That's really what we're waiting for. We want to know that we've dealt with that supply, and that nice high close is going to tell me. And if I do see that, let's call it a nice, technical term, nice high close near POS, then we can go plus 1/3, but conditional on that, and we're going to take that over there, and we're going to draw an arrow over there. Okay, let's go to the next one here, which is also for Roscoe, but that's US. We'll do that later. Terence is taking some notes for maybe is that a link you're sharing with people there, Terence, for the notes. I think that's how it works. Rupam's got US stocks. We'll do those very, very soon. How are we going for time? Not too bad. Please don't type in any more. Hi, Carl. Would you be minus? That's another US one there from Rupam. Perry's got AMA, which is one of my favourite charts at the moment. You can see the last time we looked at it was down there. It's still going pretty well through 10 cents now. That's always nice. FRP plus 1/3, no complaints. Let's zoom out and see if there's anything really sinister going on back here. Nothing I think that's going to bother us too much probably until there. Maybe in here, maybe there's a little bit in there. Let's see how those translate across. No, miles away. I think we're fine, Perry. So I think we're happy with that one. Yes, FRP plus 1/3, no question about it. Let's go to Michael's telling me his FRP on that one we talked about before. Adonis is saying he took profits on ASB this morning. That's wonderful, Adonis. Michael's saying he's going to be ZRP tomorrow. My point, Michael, is that you should have done something by now. That's my point. So don't wait to, don't wait until I'm going to see Carl on Wednesday night and then I'll ask him. No. You've got the model. Apply the model. Okay, all we've got now is US stocks. Let's head back up and do those. So we're going to head over to our trading view screen. I forgot what it's called. I have actioned everybody's requests for trend ribbons. If there's some out there, you better get them to me in the next 2 days. Otherwise, you'd have to wait a month. Let's go to Perry first. IBM, International Business Machines. You might have heard of them. Oh, look at all those, white candles. Just the cleanest of clean price action. Amazing trends. Perry, you must just suffer through the ASX, don't you? You wait there patiently for an hour while Carl goes through all the 5 out of 10s and 6 out of 10s, knowing you've got 3 or 4 10 out of 10s. Ladies and gentlemen, if you're not trading in the US, why aren't you trading in the US? Let's just make this very simple here and just type on FRP plus 1/3. And again, neither Perry nor I know where this is going next, and neither do we care. We've learnt that we're just playing the odds here. More often than not, they should go in our favour. Quite a whack of the time, they probably won't. But that's why we have a model to get ourselves out and move on to the next one. If we get stuck on the losers, we'll never get to these ones. Happy with that one. Click save. Go on to Perry's next one, OLLI. Ollies Bargain Outlet Holdings. Nice, base pattern breakout. So there's your base pattern. Obviously moving to the top, 2 really strong candles. Decent volume, maybe could have been a little bit more. Let's go back to the weekly chart to see if there's anything really sinister going on out there, and there isn't. If you can't see it, it doesn't exist. Don't start doing this and go, is there any more price action there? If you can't see it, it doesn't exist. If you can't see it on that first look of the weekly chart, it doesn't exist. And the reason for that is it's too long ago. People aren't, from 2017, still waiting to get out. Look, some of them are, but they're not going to impact the market, right? So that's a yes from me. I love these base pattern breakouts. You can set sort of stops beneath here, and as long as those stops aren't hit, you got nothing to worry about. It shouldn't come back into that base level. FRP plus 1/3. Click save. Next one is ISSC. Innovative Solutions and Support. Beautiful. So just a really powerful move through here. And the pullbacks are very shallow. This one here, this one here, this one here. And don't forget, Economics 101, when I did economics, literally Economics 101, in the Octagon Theatre over here at the University of Western Australia. Some of you may have been there. I can't remember what her name was, the professor. And, we were taught that when the price goes up, supply will increase, to take advantage of the price. And it's something that stuck with me because I learnt the opposite of that. I've learnt the opposite of that is actually the case in the market, and to respect it. So the price spiked here. I mean, it was a $7 stock became a $10 stock, and we know how we used to treat these scenarios before you met me. You used to think, oh shit, 7.10, boom, I'm out. 7.10, it's expensive now. I can't possibly buy it, and no, I should probably sell it. So because we're used to when bananas go from $1.99, there's a cyclone goes through Queensland, bananas are $10 a kilo, bananas are expensive. If I wait long enough, they'll come back down. Probably the case with bananas, but stocks aren't bananas. So when this thing goes up from 7 to 10, it doesn't mean it's expensive. It means something bloody good has happened, causing a huge amount of demand and a limited amount of supply. That's why it went up so much. And therefore you should hold on and you should buy. Okay, and that's a key, that's a paradigm shift is probably the best way to put it. And once you get over that, once you own that, then life gets very easy in the market. So what I like to see are big moves and shallow pullbacks, big moves and shallow pullbacks. And that's what this is. Now you could get big move and as well, what a great case study. Okay, I would argue that we got black candles here and we got reinforcement of black candles. Okay, and that can happen here. But that's why we have a model. And that's why we look at the candles every day, certainly if we've got an open position, and determine when these things are occurring. And we don't wait until Carl's next webinar to make decisions. We apply the decisions. We make the decision, we apply the model in the meantime. FRP plus 1/3 for me on that one. Thank you, Perry, for those 3 great US stocks as usual. Let's go up the list further now to Repalm. Repalm's got FTAI, which is I feel one we've done a few times before. Starting to come good, isn't it? I reckon we've probably looked at it on the basis of a turnaround setup before Repalm, and I think it's still moving in all the right direction there for you. I've no objections. It's a little bit flattish, like the price action's a little bit sort of scrunched up, but not terribly so. Look, FRP plus 1/3 as a turnaround setup, certainly trying to mix up our setups. Is it the strongest one I've seen tonight? No, it's not, but if it's something you have an affinity with, then I have no objections to it. CLS. Celestica also rings a bell. Okay, this is more like it. Pushing into that point of supply, a little bit of a pullback, obviously, but such a strong response. This supply is consumed. That's all she wrote. And again, I love the steepness of this. I love the white candles. I love the shallow pullbacks. And if I go back to the weekly chart, I'm confident I'm not going to see anything, and I'm not. It looks even better there. So look, I've got absolutely no issues with this, and even better than that, I think this looks amazing. So this is up there with a Perry setup there, Repalm. So pat yourself on the back for that one. FRP plus 1/3. And I'm sure Perry's also writing that down. If he's probably already on it, to be honest. Let's go to RKLB. Oh, got to remember that. I've got to escape that first, and then escape it again. Keep escaping. Get rid of that. RKLB. Rocketlab. Oh, this can only be good with a name like Rocketlab. Let's go to 1 week. Nothing out there. Oh, look at this. We had some stuff on this in the distant past. Look at that. 1/3, 2/3, 1/3. I don't know. We're adding some risk there in the history of this one. On the way up, there you go. Haven't done anything with it since, so I think it's time to start looking at it again. Look, that candle there, which is Tuesday's candle. Now I have to remember not to say Friday's candle. That's Tuesday's candle. Not ideal. Could be better. Not a deal breaker at all. It just means we're probably not adding risk on that based upon that candle. But come in tomorrow morning. The great thing about US stocks is you can sort of do your analysis now and then come back in early morning. Set your alarm, get up an hour early, whatever it is, and check them just before the close, and then make all your trades, and then come back and do it the next time. You don't have to be up all night, of course, using my model. So if this was showing next demand side candle, high close plus 1/3, absolutely. Obviously, it's not going to do that for me. Let's do that. Perhaps there we go. Plus 1/3. Obviously, we're FRP in the meantime. Let's get rid of that. Save that. Thank you for your suggestions tonight, Rupam. And I think you've got ALAB there as well. So let's do that one for you. Astera Labs, and this is more taking some off the table. And yes, for me, absolutely. And you couldn't have seen it coming. That candle there is a big problem. I'm with you, probably not acting upon that, but certainly nervous, like you almost know what's going to happen. That candle there is the trigger to take some off the table, and then nothing doing there. Look, because of the severity of these two candles, because of the close beneath the short-term trend ribbon, because the short-term trend ribbon has turned around, because we're also closing beneath all of those troughs there, all those points of demand, this is more than a minus 1/3 proposition for me. It's minimum minus 2/3 and potentially even ZRP as a result of that. Hasn't turned out. So we take our licking and we move on. Okay, IE from Roscoe, Ivanhoe Electric. It's a turnaround setup. Yeah, look, I think it looks really interesting. Shame about that candle. That's the only problem with it. Otherwise, it's really strong. If that was just a benign little candle, like we're talking super strong setup here. Now, nice motive phase, shallow pullbacks, really cruisy move through the long-term trend ribbon. Like it wasn't even there. I love that. Pull back, nice hold. Just that candle just worries me a little bit. Like they were pretty keen to get out on that day, and the demand side was nowhere to be seen. I reckon that was, in fact, I know that was the down day on the Nasdaq, wasn't it? There was a down day in the US market, and maybe we can forgive it a little bit on that. I probably should have even my RSCs and all the other indicators. I don't know why I don't. I just the template I happened to be in before I started tonight. Yeah, look, I can get past it on the basis that I like everything else so much. You know, uptrend, short-term uptrend ribbon is cradling the price. The long-term uptrend ribbon now is acting as dynamic demand. Otherwise, the candles are great. You know, looking at this candle here, this candle here. So yeah, look, FRP. I could look past that black candle and go plus 1/3. Click save. Next one is going to be moving up the list. I think we're going to get pretty close to the end here. Just Adonis, lucky last Adonis for your Caterpillar CAT. This is nice. This is the best turnaround setup I've seen tonight. Yeah, I really love those last two candles. No big black candle to speak of. Great to put these two together, isn't it? So, can't go back, so that's not going to work. We'll go back to the last one, which, if you believe, I've forgotten what it is already, IE. So, for Roscoe, who gave me this one, you probably haven't seen the other one, have you? But can we see why, without that black candle, they're almost identical setups, but without that black candle, it makes this one look so much better. A little bit of a gap and run here as well. This one's definitely ready to go. I'm happy with this one. I think it's a really nice turnaround setup. I like to mix up my setups between continuations, turnarounds, you know, hybrid turnarounds, aggressives, if you can get them. I'm very happy with that. Let's go to Adonis's next one, which is JP Morgan, which I'm going to guess looks a lot like Commonwealth Bank. Sure does. Adonis, correct me if I'm wrong, but I'm pretty sure you're already on this one. So more of an FRP sort of question. Yeah, FRP for me. I could add a third, not on that last candle, it doesn't warrant it specifically, but certainly if we can see the next demand side candle high close, then a yes from me. But happy to continue that. And for the people, you know, that think CBA is overvalued by Australian market standards, you know, I think you need to check the PE of some of these other US banks, which are probably the 20s also. URI, we're part of a small part of a global market. You know, you can't just think, oh, it's Adonis nailing it on these turnaround setups. So I love this. Yeah, the price action looks like it was heading the wrong way, but it is a consolidation. It's a consolidation to sort of just deal with that long-term trend ribbon, and it's done that. So I'm more than happy with this. Those last two candles are perfect. Let's go plus 1/3, and that's a really nice turnaround setup as well. So Adonis a little bit on fire here. Let's go. He's got 3 left for us. ABT, Abbott Labs, I'm guessing, when it comes up. Spinning circle of death. Hopefully you all can still hear me and the internet hasn't gone down. Isn't that weird? You click that, and you click that, and it comes. There you go. Yes, good. Not as good as some of the other ones, but very, very strong. I mean, look, it's losing some marks because of a little bit of the compression of the price action, but the compression of the price action is happening because of this major point of supply, and it is a proper point of supply there. Let me just go back and see what's going on out the back. Look, there's nothing going on at the back there, so that's fine. That sort of pushes up a little. Just that point of supply. How do you feel about it? A little bit of supply coming in there. That's all. The only reason why I'm pausing is I'm thinking, do I want to have a crack at it? Do I want to try and, bully that point of supply, or do I want to show it a bit more respect? Hey, the broader market is solid. Why not? Why not? I'm going to say some of the other ones we've seen tonight. Say it again. Somebody had a comment. Yes. Yes, I agree. Yes, there's just a little bit of an upper shadow there, though, telling us that supply is still on the market's mind. So it's like, do we want to force the point, sort of, or do we want to be brave on it, or do we want to just respect it a little bit? I don't mind it, and like you say, on the strength of that candle, and as I said, given the rest of the market's so strong, I could go. But then the next comment is, well, some of these other ones we've seen tonight don't have that impediment, so might we gravitate towards some of those? That's all. But yep, I agree. NWSA. And one more after this, everybody. This one, again, turnaround setup, very strong, or turnaround continuation. Just that point of supply, we're not near it. We've still got a bit more work to do with it. And the reward to risk comes to mind here. So if we're getting in around here, let's call it 29.34, where is that, where we're going to start to take risk off the table? We won't call it a stop loss, right, in the traditional sense, but because we have other ways of getting out rather than something just plummeting beneath the stop loss. That's not how we do things. We're far more active than that. We're not passive. So what's our reward to risk? I mean, if that's where we're going to start to find some supply and we're getting in here, I'm not sure we're going to make this work on a reward to risk basis. If we took out that point of supply, it changes the trade completely and it makes it easier. So on a setup basis, no problems, FRP plus 130 if you wanted to, but this is probably going to get filtered out when we go past the setup stage and start to look at reward to risk once we've got our final setups in place. So probably not as keen on that one, although I can see definitely a demand side controlled market. And EA is very similar again in that we have this point of supply. I think we're closer to it though, or I know we're much closer than the last one. We've closed without fear of it. That's important because this is a proper point of supply. You can see the severity of it there. But then we've got that one also not far away. I like this one better than the last one, but do I like this one better than some of the other ones we've seen? Not so sure. But again, on a pure setup basis, absolutely FRP plus 1/3. It is a strong one. It's going to be 7.5, maybe even bordering on 8 out of 10. That's where some of the other ones we've seen are 8.5, 9 out of 10, 9.5 out of 10 out of 10. So 7.5, bordering on 8 out of 10. That's how much I rate this one. And yet we looked at a bunch of Aussie ones that were trying to get to 5 out of 10. Okay, so sometimes we're a little bit spoilt for choice in the US. So if I'm not loving it as much as some of the other ones, it doesn't mean I hate it either. It just means that we've seen some ones that are better, and there are some issues there which it's my job to point out so that you know next time we look at the chart that these things are what they are. On that note, ladies and gentlemen, getting all teary here. We're not going to see each other for how long now? For about 4 weeks. I better just quickly read the disclaimer for the recording. Just to remind everybody in the recording, of course, that everything we've discussed tonight is general advice. Don't run out and do stuff based upon that drill and advice and then blame me if it doesn't turn out the way I thought it would turn out. I can't tell the future. I don't know if you know that. So it might not turn out the way I thought. And you could lose money. In fact, you're probably going to lose money based upon something I've said at some stage. But it's always you who's responsible for the stuff you do, not me. Don't forget that. Otherwise, ladies and gentlemen, I know it's gone all very bright here in the studio, but it's been a pleasure chatting with you tonight. And of course, all the time up until this point. I'll be back on the 28th of July. You have a wonderful, wonderful, safe time wherever you are, and I'll try and do the same. All the best for your trading and investing until then. Bye-bye for now.